Welcome to Forex Films. Today is Tuesday, July 26, 2011, and the theme for the past couple weeks has been US dollar selling, and that has been mainly due to the fact that the US debt ceiling has not been raised and the political parties have been fighting back and forth. Even though this has been discussed for quite a few weeks, just that the political posturing continues to occur when the U.S. will start defaulting on debts by August 2nd is what has really made it a worthy piece of news to trade. And I really think that they will find some kind of solution. It may not be a good solution, but some kind of solution to raise the debt ceiling before that happens, and then the US dollar will be saved. The US government will be able to still borrow at very low cost rates and hopefully still keep their AAA credit rating. But for now, it is a very good reason to sell US dollars, and we will continue on that path for at least a couple more days probably. So here's a daily chart of the Euro US dollar, and the latest Elliott wave analysis I put out that isn't on the main page, but if you take a look on the front page of forexfilms.com, you can see that this is a potential wave 1, then A, B, and C of wave 2 will probably be in the 147 somewhere. And this is just a potential. This isn't necessarily even my primary, because my primary still says that we're either in C of Y or Y of Y higher, and that will take us all the way to 1.54 to 1.55. But we need to watch 147 to 148 very carefully, and that will help us determine whether we want to short there or continue staying long, or even get out for a little while to wait for the obvious movement to come and trade that. So here you can see this is why 147.50 to 148 is good resistance here, and we need to surpass this high for wave A, which is at 146.95. And then if we go out to the monthly, you can see 147 here had an extremely sharp retracement when it was hit back in 2008, plus we have more resistance here and way back over here in late 2007. So there's a lot of good reasons to short in this area, and I really discussed all these way back in April when we were first coming back up there, but they still apply. So if that does happen, then we will continue to go down, and it should accelerate in a third wave. But really, for the shorter term, it looks like we have wave 1 here, 2, 1, 2, 3, 4, 5. So we could come back and test that downsloping resistance, or resistance turn support, and then continue higher. Tomorrow that would be 44.20, which is very, very good support. And on Thursday it would be only very slightly lower, like looks like 44.15, 44.20. But enough about the euro, let's look at some other pairs. Pound dollar. Now pound, when it reverses, it normally looks like a three-wave correction initially, and then it's really how I'm counting on the euro: 1, A, B, C of 2, which would put us right at about 1.66 for reversal. And this is something that happens often on the British pound, so that wouldn't be low probability, but since it's happening on the euro too, it makes it seem less probable. Now the Aussie US dollar, we have come all the way almost back up to 1.10, and since we're so close to a new all-time high, I think it's pretty much guaranteed that we will hit it again, and that really brings us back looking to 1.12. Now here, once again, it looks like we've got 1, 2, 1, 2, then 1, 2, 3, 4, 5. So we could experience a period of retracement consolidation before last couple moves higher. And when we surge to a new all-time high, usually that gets retraced back down to the previous all-time high. So that could be our next fourth wave, and then one final push, maybe up to 1.1350 before the real reversal comes in. So this is actually looking even more bullish than the euro at this point, but certainly if the euro looks like it's going to break 1.48, then that would be an excellent bullish opportunity also. Dollar CAD, and I've been using all daily charts for the basis here, and that's mostly because things have on the short term been playing out just as my analysis has been showing in the Forex daily in the morning. So we're looking longer term to see targets here. And the dollar CAD looks like it's going to continue dropping lower, and we could easily start accelerating now that we're below this previous low, and it still looks like we're headed all the way down to 92.50 to 0.92. Continue to like this trade, and just testing this support turn resistance, and then it's probably an excellent time to short again. Dollar Swiss finally hit that 0.80 level, and this is probably one of the ones that's going to retrace the most, just because of how important that level is. But if we are going to experience a lot more US dollar bearishness, we could and still have the potential of coming all the way down to 0.75. So keep your eye on that. And dollar yen, we continue to be pushing down, and as I said on my Forex daily analysis, we've had a little bit of slowing momentum, but sometimes it just appears that way in third waves, and we can continue hammering down like this again and again and again for days and days and days. So I wouldn't expect any kind of rebound higher at this point. As long as we're staying under 80, this still looks good as a short. Above 80 looks like 86 to 87, and then short again. And last but not least, New Zealand US dollar. The new all-time highs just keep on coming, and if we're looking for near-term targets, we're looking at 87.50 and perhaps a final target of 0.90. So this still looks good long, but I still like the Aussie better. So good luck trading. Keep selling dollars for the next few days, and we'll see where we go from there.